All right. Well, we are now recording. So good evening, everyone. Thank you for joining me today for the Wealth Mindset and Real Estate Investing virtual meetup. I am your host, Chris Price. I'm the managing partner at Boost Capital Group and also the CEO and co-founder of Red Fox Multifamily. Before we get into tonight's presentation, which I'm super excited to bring to you guys, let us talk a little bit about our sponsors. So first, about the Wealth Mindset and Real Estate Investing virtual meetups. So this virtual meetup is open to all who are interested in growing generational wealth through passive real estate investing, increasing their financial intelligence. This meetup is for the busy professionals and retirees across various industries. The individuals in the group make a good living and they have discretionary income to invest in real estate for its proven wealth building power, but don't often have the time, skill set, or network to do so at speed and at scale. This meetup focuses on helping us all grow our wealth mindset by leveraging how to build our and preserve our wealth while developing and maintaining an abundance mindset. This meetup will focus on multifamily real estate investing as well as other proven ways to build wealth through real estate through passive investments. And we're sponsored by Red Fox Multifamily. Red Fox Multifamily helps pharmaceutical and life science industry professionals diversify their portfolios, add passive income, and get all of the other perks of real estate investing without having to do any of the work themselves. Red Fox Multifamily partners with passive investors to buy commercial multifamily real estate based on vetted opportunities we get access to from our trusted network of top operators in the best markets throughout the country. Partnering with Red Fox Multifamily makes investing in real estate completely hands-off, allowing investors to add passive income, build equity, and save on taxes, all while being in an investment vehicle that's backed by a hard asset. We're also sponsored by Boost Capital Group. Boost Capital Group's vision is to become the premier partner for busy professionals and entrepreneurs seeking to build and preserve their wealth through passive real estate investments. And as always, for those of you who have not had a chance to connect with, I'd love to connect with you. Please do reach out to me. My email is on the screen, chris@boostmycapital.com, or you can also scan the QR code and have access to all of my contact information. So please do reach out. So for tonight's agenda, we're going to go through, I'm going to introduce our speaker here momentarily, and then our speaker is going to give a presentation on a really exciting topic. We'll have some Q&A and virtual networking. Without further ado, let me actually talk a little bit about some logistics. So, if you're not speaking, please mute your lines, hold questions to the end of the presentation. This presentation is being recorded. And then, of course, the materials does not constitute an offer or a solicitation to purchase securities. And this is information only and should not be construed as business, financial, or legal advice. So I have an awesome speaker for us this evening, Mr. Owen Lind, who's coming to us from Advanta IRA. We'll talk a little bit about his background here momentarily, but just, this topic I'm very passionate about. And the reason is because as a pharmaceutical executive coming up and understanding different ways to invest my resources, one of the things that I could invest was through the financial markets, whether that was through some sort of, stock investment or through my 401k that the company was sponsored. And that was the only way that I could do that. And when it comes to other things like real estate, I have to have all sorts of liquidity, laid up cash savings, or other types of things that I might have access to be able to invest in those things. But then several years ago, listening to podcasts and, doing some personal development and just learning, I learned that you could actually invest in alternative assets such as real estate and other things that I know we'll learn about this evening with your retirement funds. And that was a major unlock for me. And I think it will be for those who are going to listen back at this as well. So our speaker tonight is an expert in the space, and he's going to be able to relay some really insightful information to you. So let me share with you a little bit of background about Owen Lind. So Owen, self-directed retirement investing expert and has been in the industry since 2017. He holds FINRA Series 7, 63, and 65 licenses, as well as securities to industry essentials. Before joining the Advanta IRA team as a business development executive, Owen held roles at financial firms including Merrill Lynch, TD Ameritrade, and Paychex. He has spent his career helping investors use retirement accounts to invest beyond traditional markets. While in college, Owen developed a strong passion for entrepreneurship and has since co-founded multiple companies and worked closely with small business and incubators. His experience spans both in institutional finance and hands-on business development, giving him a practical, real-world perspective on alternative and private market investing. Owen's personal investing interests include cryptocurrency, private lending, and private equity. Professionally, he has helped thousands of self-directed investors use their retirement funds to invest in alternative assets. And I hope there are some folks out here that are going to listen to this, learn some things. So Owen, thank you so much for being here. I'm going to toss it over to you so that you can help share some insights with the listeners.
Perfect. Yep. No, I appreciate that very much, Chris. And we can go ahead and pop things open here and we'll go ahead and get started. So yeah, as Chris was just sharing, so my name is Owen. I'm one of the outside business development reps here at Advanta IRA. We're a custodian / trust company / administrator. So what that basically means is it's a fancy way of saying that we're a financial company that can hold alternative assets under our roof. So that would include like real estate, private equity, private lending, other types of investments that most investors aren't aware that you can even do in a self-directed IRA. So only 6% of IRAs out there are self-directed in nature. So that's really what we're going to be talking about tonight. It's just so not known in the industry. So without further ado, we can just jump in here. I'm going to share some underlying fundamentals, and then we'll go through some different case studies as well. If you have any questions on anything, feel free to reach out to me. Always an open door. Reach out to Chris as well. We do work frequently with them and folks that are connected to Red Fox Multifamily as well. So we can go ahead and just kick it off here. So just a quick disclaimer from the attorney at Advanta. So Advanta IRA and its employees do not provide investment advice, nor do we endorse any products. So all information and materials are for educational purposes only. So it is very much encouraged to consult with an attorney, accountant, CPA, financial advisor you have in your professional circle before making any sort of an investment. It's a good idea to do due diligence before you actively invest into something and use your capital to do so. I'll be your presenter tonight. So basically outside business development at Advance. So I work with companies that are raising capital through self-directed IRAs, and I work one-on-one with investors that are ultimately moving funds over to invest into different investments, but have been in the industry for over 10 years in overall finance. I've worked at a variety of different financial companies, but worked at a couple of different self-directed IRA custodians. I've also worked at a couple of different financial providers. So it's been an interesting contrast to see that over the years between managed money and basically self-directed money. So what we're going to be talking about tonight is a lot more interesting than managed money with a financial advisor per se. Just some background on Advanta here. So I've been in business for over 23 years. We're considered one of the nation's premier self-directed IRA custodians. Our team is most comprised of attorneys, MBAs, CFPs, and CISPs. So certified IRA specialist designation. So that's a test you have to actually study for. A majority of our account managers here actually carry the CISP designation. We're considered a trusted custodian. So we have clients across the nation. We now manage over, that number has grown. It's now $4.3 billion in assets under administration under our roof. And we work with a variety of CPAs and attorneys in our network. So if you are looking for an attorney or a CPA for something related, certainly, feel free to reach out to us. We have quite a large network. And then we're considered secure. So what we mean by secure is much like a large bank or a large broker dealer. You would observe FDIC insurance on your cash that's held at Advanta IRA. So we work with a number of banks in the background. So that means that we carry FDIC up and above the insured amounts for each account. So basically, we can carry FDIC, well in excess of $250,000 as we work with various multiple banks. So if you have questions on that, certainly feel free to reach out to me. And then lastly, every Advanta IRA client has a dedicated account manager here. Every client here does have a dedicated person that they can reach out to that will help them through future investments. So that would be the designated account managers. And we'll touch on that in a second. In business since 2003, and we now have over 65 staff members under our roof. But this is one of the team pictures that was just recently taken a couple of months ago. And as I was touching on with the account managers, we believe that service should be personal. So our clients are never routed through a call center. As said, each client is assigned to a dedicated account manager who is deeply familiar with their account. So there's about a third of our account manager team here. But again, these are really what keeps the wheels turning at Advanta is the fact that we have these amazing account managers that are working with all of our clients every day. So we're super lucky to have them and that they're on board. So we're talking about self-directed IRAs, right? So for those that are brand new to the subject, so what is a self-directed IRA? So you have basically two different kinds of IRAs on its face. So we have like a normal IRA. We would consider that with a financial advisor or a broker deal. It's what we call like the large trading companies like your Fidelities, Charles Schwab's, Merrill Lynch's of the world. So basically it's an IRA that can only do stocks, bonds, ETFs, mutual funds. So basically the normal stock market items. So that's what we call a normal IRA. Now there's a separate category that's called self-directed. So Advanta is one of about 20-ish custodian administrators in the United States that can actually facilitate these transactions. So we're a unique kind of financial company. So we can handle real estate, precious metals, private equity, raw land, investing into private LLCs, investing into real estate portfolios. So these are all items that you can hold directly in a self-directed IRA. So you would actually see that in your IRA, much like you would like a stock or a bond. There are only specific companies that can do this. So like if you go to like the Fidelity or Charles Schwab, they're going to point you in the direction of a self-directed company. If, for example, you wanted to buy a piece of tangible real estate because they don't have the ability to basically hold that under their roof. So on its face, that's kind of the difference there. And that's what a self-directed IRA is. So in essence, what this gives you is a greater diversification and a greater selection of different investments that we can hold in the self-directed IRA. So for example, we have just on the screen here, you'll see crypto and Bitcoin and venture and startups. So think about like companies before they IPO. Use the example, we had people that invested into like Facebook before it went and IPO'd. We had private investors in SpaceX. ChatGPT, again, we've seen people privately invest into that company. I'm sure they're going to get a phenomenal return with ChatGPT. So those are some examples, but these are private equity investments that you can make. Obviously, real estate, so that'd be tangible real estate, investing into real estate syndications, that's portfolios of real estate. Promissory note lending, so that's where the IRA becomes the bank. So you're actually able to issue private loans other individuals to other companies, and they're paying that interest back into the IRA on a monthly or quarterly basis. And then your various private funds, we call those private placement memorandums, PPMs for the private funds, and oil and gas and mineral rights, another big category. So you see a lot of like oil wells and mineral rights on raw land. So basically, if it's not in the stock market and it's something else, it's pretty much going to fall under the umbrella of self-directed. So again, if there is something that you have in mind, feel free to reach out to us. There's a couple hundred different categories here, and some of them are pretty niche as well. So it can get very finite. Definitely reach out with questions. So basically, what accounts can we self-direct? There's a variety of different accounts available. So it'd be the same as the ones that would be at the large broker dealers. So we have our personal accounts. That'll be the individual accounts. So that would include the traditional IRA, Roth IRA, inherited IRA. So these are going to be for individuals, not for small business owners. So basically, Roth is going to be an after-tax vehicle. So when I take that money out, it's going to be post-tax, and then traditional is pre-tax. So if I take that money out, basically I'm going to be taxed at my normal applicable tax bracket on those withdrawals. If I take the money out before the age of 59 and a half, I'll also have a 10% early premature withdrawal penalty of 10%. But basically, these are individual IRAs, and an inherited IRA means that if I had a family member that passed away and it became an inherited IRA and then I inherited that, that's an inherited IRA. So that's for individuals. And then we have small business owner plans. So this would be solo 401k, SEP IRA, simple IRA. So in a nutshell, these are going to be for small business owners that basically have active earned small business income. So for a solo 401k and SEP IRA, you can actually go up to $72,000 a year in qualified contributions. So that's almost 10 times as much that we can do in a normal traditional or Roth IRA, which is 7,500. So almost, 10x multiplier on that. If I'm a small business owner and I have active earned small business income and I don't have any employees aside from if, for example, my spouse was, if my spouse was on payroll, then I could do a solo 401k plan. Now the SEP and the simple IRA, if I do happen to have employees, I can still qualify for a SEP or a simple IRA. These would get into the details, into the weeds pretty quickly as far as like the characteristics on these. So again, if you are a small business owner, you're looking to maximize, put more money away, feel free to reach out because I can break it down for you. We typically see SEP IRA and solo over simple, but again, simple IRA, sometimes it does make sense in very specific situations. So just keep that in mind. And then the last column you'll see here is the 401k plan, 403b, TSP. So these are previous employer plans that you can roll over into an IRA. So if you left your job, for example, like thrift savings plan, that's typically going to be through like the federal government. If I had a job and I had a TSP plan, for example, typically speaking, once I leave or I reach a certain age, I can then roll that plan over. So that's where we would say it's a qualified rollover. And that's how we would roll funds into a self-directed IRA. So if you happen to have, previous 401ks lying around, a lot of folks do, you can actually put that money to work as well. And we can do a qualified rollover into the IRA. So that's, again, not going to be a taxable event. It's completely tax-free to roll those funds over. So never going to be penalized like you're taking the money out. So we'll break that down just a little bit further. So we're going to talk about transfers and rollovers. So first category is a transfer. So transfer means that we're going from one IRA to another IRA. So if I have a traditional or I have a Roth or I have a SEP IRA or a simple IRA, I can move that to a like-kinded account at a different provider or with Advanta IRA. So if I had a traditional sitting at Charles Schwab, and I wanted to use that to buy real estate, then I could move that to a traditional IRA with Advanta IRAs. We call that a direct transfer. So that's different from a rollover, which we'll touch on the next slide. So that's when I'm bringing funds in from a previous employer plan. But this would also apply if I have an HS, Coverdell Education Savings Account, CISA account that we'll touch on. That's basically an account that's for minors under the age of 18. And you can do $2,000 a year into a CISA account. HSA, obviously, through your workplace, you have access to HSA accounts. Those can also be transitioned, but that'd be considered a transfer, which is different from a rollover. So rollover here, that's going to apply if I happen to have that previous employer plan. That's going to be like my 401k, 403b, 457, TSP plan. Those all fall under the umbrella of a direct rollover. So again, never taxed in any way. We're not taking the money out. We're not going to get hit with any sort of distribution taxes, any penalties, because we're just doing a direct rollover. So that's the key thing. We're moving it to another retirement account. So we call that a direct rollover. So it's touching on some of the other plans as well here. This is for the 2026 contribution limits, what you'll see on the screen. So basically on the left-hand side going down, I was touching on the contribution limits a little bit earlier, but starting at the top, the most common account types would be like your traditional and your Roth IRA. So again, this is pre-tax, post-tax accounts. So if you're under the age of 50, you can do up to $7,500 annually in contribution. If you're over the age of 50, that number is $8,600. I will just pause. So this has nothing to do with transfers or rollovers, and there's often a lot of confusion around that. So if I have, $500,000 in a traditional IRA at another company, I can move over that entire thing as a direct transfer. There is nothing stopping me from doing that. The numbers that you see on the screen here are how much I can add from my bank account on an annual basis that the U.S. government will actually allow me to contribute to the plan. So that is probably one of the number one questions that we get. So just thought that I'd break that down. So basically these are contributions and we're not talking about transfers or rollovers. So we have our traditional and Roth, and then we have the SEP IRA and SEP Roth IRA. So again, that's going to be pre-tax, post-tax, small business vehicle. I can go up to $72,000 a year into that. Simple IRAs is going to be for small business owners that have employees. Typically, it's a good fit for employers that have less than 10 employees. That's where we would talk about a simple IRA. So I can go up to $17,000 in qualified contributions into the simple IRA. And then the 401k plans, so this could be like your, individual 401k, and you can set this up if you're a small business owner and you're yourself or your wife is on payroll. Then we can talk about a solo 401k. If you do have any W-2 employees, then that would fall into the SEF IRA. Then we wouldn't be looking at a solo 401k plan, but very similar to the SEF, you can go up to $72,000 a year into qualified contributions. And then we have the covered L account. So it's going to be for minors under the age of 18. So that's going to be $2,000 a year in qualified contributions. Again, this is going to be for, at the end of the day, like we'll be using these funds for qualified educational expenses, such as higher education or college related. However, if, somebody in the family has a covered L and they don't ultimately use those funds before the age of 32, it can be transferred to another member in the family as well. So we can actually roll that covered L to somebody else and they can be used for their educational expenses. So just a small fact there that most people are not aware of, but that's pretty much for educational expenses only. And then lastly, it's the HSA health savings account, qualified, health expenses here, but we can grow that money. We can incorporate it in deals before you use it for health expenses. So you can actively use that capital and you can tie it up into real estate, other investments. And then those returns are going to be able to be taken out later for health related expenses. So talking about alternative investment options here. So these are really the most popular ones that are listed on the screen here. So not getting into like the obscure stuff, really just the most common things that we see here. So that would be like real estate. That's going to include like your rentals, short-term rentals, rehab projects. Commercial real estate, that's going to be like retail centers, multifamily syndications. That's what we consider more commercial. Private equity, that's going to be, again, private companies before the IPO. Convertible notes, hedge funds, those are great examples. And then private lending, so that's what we were talking about earlier. The IRA becomes the bank. So that's when the IRA is actually going to lend money out and get that interest income back into the IRA on a monthly or quarterly basis. And then that balloon payment comes back at the end. So these are kind of the more popular categories that we commonly see here at Advanta. So these are all alternative investment options. And we're going to jump into some different case studies and kind of break these apart. And this is where, basically the rubber meets the road and you can see where basically these transactions happen in real life. So we're going to break these down one by one. So the very first case study that we're going to talk about is the checkbook control case study. So I'll go ahead and get started with this one and we'll break it down. So basically, this is a client of ours. His name was Mark. So Mark was a 45-year-old real estate investor, had approximately $210,000 sitting in a former employer's traditional IRA. So traditional IRA that he had over there. So he wanted more control over his retirement funds and he preferred hands-on real estate projects. Again, real estate investor at heart. That's what he knows at the end of the day. So he wanted to invest in what he knows. So after researching, he found out that self-directed options are available and that he can ultimately use a self-directed IRA to invest into real estate and other investments. So he wanted to do a fix and flip strategy and he ultimately wanted to do that in a self-directed IRA. So this is, we're located in Florida, one that was just north of us that was in Jacksonville, Florida. But basically, we're going to talk about a piece of real estate that he acquired. So he basically established his self-directed IRA. He did a transfer for those funds to come over to Advanta. And then he engaged in the property purchase. So the purchase of this property was $150,000. He had a renovation budget that he used. So he had $40,000 that was in the IRA. So that renovation budget was used to ultimately get to a total amount of $190,000 all in. So that's with the purchase and the renovation. So he exited and he sold this property for $260,000. So he pocketed $70,000 in his self-directed IRA. So we're going to break this apart just so you can kind of see what that looks like, step by step. So first off, we're going to talk about what we call Checkbook LLC IRA. So we're talking about self-directed IRAs earlier. We're going through the different plans. Now there's something else that you can connect to a self-directed IRA, and that's called a Checkbook LLC. So a Checkbook LLC is basically an LLC that is stood up, and we can hold unlimited number of investments in that Checkbook LLC. So I can hold real estate, private lending. I can use it for different trading on different platforms, but it's all basically going to be buttoned up and held in that LLC. So in order to set up an LLC, which I'm sure a lot of you are, somewhat familiar with. There's some basic things that we typically will do. So we'll have the filed articles of organization that's filed with the state. That depends on what state that you're filing in. And then we obtain a tax ID number. So when we're using it for an IRA purposes here, when we actually assign that EIN number, there is a dropdown for retirement accounts specifically. When it asks you like what the purpose of the LLC is going to be used for. So we go through that process when obtaining the tax ID number. And then finally, we open a bank account. So after the filed articles are filed, that's in motion and we're able to establish the LLC bank account. The business has been formed. Basically, that's going to be able to connect to your self-directed IRA. And we're going to be able to break that down in just a little bit more detail on why people ultimately do that. So again, this is a little bit more in the weeds. So basically, you do have like a registered agent as well. So services that you can do every year. We work with a couple of companies that will actually offer this as well for registered agents, which we'll talk about a little bit later. But when you're filing the LLC, you have to name the LLC. The management's going to have to be broken down upon that filing as well. So we typically will work with our clients with this, with some of the attorneys that we work with at Advanta IRA, or you can certainly use your own. But basically, there's a number of things that go into filing that LLC and basically getting that stood up. So basically, long story short, Mark was able to establish the LLC. He used one of the partner companies that we use. He got that stood up. So that money was connected to his IRA with the LLC together. So he actually closed on the property under the LLC name, but it's all under the same retirement umbrella. So the LLC was funded with his retirement account. So long story short, this is the property beforehand. So he was able to execute on this purchase here. So as you can see, it's in pretty rough condition. So again, purchase price was $150,000, and then final sale price was $260,000, netting him $70,000 in profit. So that is the after on the property. We often tell people it's about making it as livable as possible. Rinse and repeat, move on to the next property. So I'm sure that a lot of you that are real estate investors, are obviously familiar with doing fix and flips and rehab projects, but he kept it simple. So he's able to rent this out and then, basically decide he was going to rent it out, but he ultimately sold it. But that's basically how he goes about making transactions in his IRA. So that was case study number one. We're going to move on. So this is more of a private real estate investment. So this is a private syndication. So you'll see this is a syndicated apartment complex. This is also located in Florida here. And basically, this individual is privately investing into this through his self-directed IRA. So we'll go ahead and break it down. So gentleman's name was Nick. So he rolled over $150,000 from his old 401k into a self-directed IRA to access alternative investments such as real estate syndications. So he invested in a multifamily real estate syndication focused on value add apartment complex. So this is in the Sunbelt market. So this company basically was buying older apartment buildings, ones that needed help. And then they were doing their value add to modernize, put washer and dryers in, do full rehabs in these units, basically add value, increase rents, and then basically, provide value for investors. So that was the scenario for this one. You're seeing the property after it went through renovations, but this is a 220 unit multifamily property. So the whole period was 5 years. Minimum investment on this one was $50,000. So Travis decided, hey, rolling over 150 grand, I'm going to invest 100,000 into this. This looks really good. I like the returns, and the other 50,000, I'm going to put that somewhere else. So that's ultimately what he wanted to do there. So he basically invested the 100,000 and then he kept the rest liquid for other deals. So the 3-step process on what that looks like for going self-directed. So this is basically for this particular transaction, we'll break that down. So step one is we're able to open the self-directed IRA. So if you have an eligible 401k or IRA, you can certainly move that over. So we go through an application process when we set up the account, and then we do the transfer or the rollover process. And then that's step two. So the self-directed IRA, basically we're going to hold this investment directly under the IRA here. So it's not going to be under your personal name. The IRA is going to own it. So you would get with your account manager and then they would collect the underlying documentation. So for this particular example, basically he was able to get with his account manager and he provided them with the subscription agreement, the PPM, the underlying documents, and that listed the IRA name and not his name personally because his IRA was actually making the investment. So basically got with his account manager, they completed the transaction. So he invested directly into the syndication, and then he's owning that, basically that piece of it in his self-directed IRA. So this is a 5-year hold period, but this is just a breakdown on the 3-step process involved there. So basically, after the account's open and funded, you would just get with your account manager, and then they can help you with the underlying documentation, just to make sure all that looks good and basically get the investment completed. So we're going to jump into, we're wrapping up this case study here. So this is still the same one. So after the 5-year hold period, basically he exited. So the sponsor successfully executed the business by renovating the units on the 220 unit building that we were just talking about. So basically the asset appreciated and generated consistent cash flow throughout that time period. And it had basically total distributions and cash flow that came back to the self-directed IRA as well, because the self-directed IRA was invested into this. So basically at exit, the property was sold to a larger institutional buyer. So they increased the value created during the whole time. So Travis's $100,000 that he had invested, all said and done, he earned a total profit of $80,000. So that includes the distributions and the sale proceeds of this particular building. So that came to $180,000 that went back into a self-directed IRA all in. So pretty decent return over the course of 5 years. So he started with 100,000, ended up with 180,000. But this is, a good example of different projects that you can ultimately invest into this 220 unit project. So moving on, we're going to talk about the next case study is going to be on raw land. So it's another pretty popular category. We're actually seeing a lot of transactions lately for folks that are going into raw land transactions. So in particular, we do see people that will flip lots. So they will basically find underpriced lots that they know, maybe it's going to be, up and coming commercial area in a couple of years, or basically they know it's a hot market right now, and they'll ultimately acquire that in their self-directed IRA, and then they'll sell it later on to developers. They'll market it sometimes to sell to developers. Or maybe they'll do a value add, maybe like electrical, water will be put in, and then they'll later sell it as well. That's quite common as well. We're going to take apart this transaction and just break it down in a little bit more detail. So starting off here, so Nick, a self-directed IRA client, so he had $185,000 sitting in a traditional brokerage IRA. Was earning fairly minimal returns, so he wasn't the happiest with that. So basically had experience personally flipping small vacant land lots. He had done that with his own personal cash. So he wanted to basically apply the same strategy with his retirement account and start doing that in his retirement account. So basically, after opening and funding the self-directed IRA, he identified an opportunity. So he found some land lots that he thought was going to be pretty decent option that he wanted to do in the self-directed account. So these were 2 vacant residential land lots that were basically outside a growing suburban market in Georgia. So the purchase price per lot on these came out to $22,000 each. Now, he knew upon looking it up, and he knew just based on the area that he could likely get $35,000 to $40,000 per lot on both of these. So it's basically almost going to double his money. So basically, he was able to buy the land lots. So he acquired those for $44,000. So he got these from a motivated seller who actually inherited the property, and they wanted quick liquidity. So wanted to go ahead, just sell it, just, move on with his life. Didn't have any interest in doing anything with those lots of land. So basically Nick was able to acquire these for $44,000. So how he structured this investment, how it actually happened, is just a breakdown. We'll cover that right now. So number one, Mark submitted the purchase contract in the name of his IRA. So again, it was under Advanta IRA FBO Nick Ting IRA. So it's under the IRA name, not under his name personally. And that moves us on to step 2. So Advanta IRA reviewed the documentation for compliance. So he handed that off to his account manager. Account manager reviews that, make sure it's good, and then submitted. Then step 3, the IRA funded the purchase directly from the IRA account. So basically funds leave the Advanta IRA, and then the lots of land are acquired directly under the IRA name. And then the title was vested in the name of the IRA, not his name personally. All closing costs were also paid from the self-directed IRA. So the holding period in the resale, basically what happened here is he held that land for 5 months. Minor costs were involved, including property taxes and closing fees. Those were paid by the IRA. And then he didn't do any improvements to the land here as well. He didn't use it for any personal services, didn't engage in anything that wasn't allowed. He's just simply holding the land to sell it a little bit later on. So after the 5 months, basically the financial results here on this transaction, we'll break that down. So his total purchase price was $44,000. Total sale for both of these was $74,500. So his gross profit was $30,500. Net after closing, after taxes, came to $27,800. So in a very short period of time, he was able to basically hold these, basically hold them for a 5-month period. And then he's able to sell it to developers in the area that were looking to come in. So he did a good job of doing that. And all those profits went back into the IRA. So the key takeaways here, again, this is the raw land flip into the self-directed IRA. No leverage was used. So there wasn't any what we call UBIT taxes. There wasn't any sort of leverage or debt on this transaction. It was just cash on cash. Quick turnaround time. So he found an opportunistic investment and was able to sell it quickly. And this was properly structured. The custodian, we were able to coordinate everything with them. And it's just a good example of, stuff that we see here every day. So we see a lot of people that are doing raw land transactions in their IRA. So that was case study number 2. So we're going to jump into case study number 3. So we were talking a little bit earlier about the IRA being the bank. So that's where the IRA is actually going to issue loans out of the IRA itself to another individual or to another business owner, for example, another business. So that's what we call promissory note lending. So that's where the IRA is the bank, essentially. So we're going to break that down for a case study example here, and we'll break that down together. So this is basically is a $200,000. It's going to be the total amount that's going to be funded for this promissory note. Again, a promissory note is basically it's an IOU. It can be collateralized or uncollateralized. So collateralized means that there's something that's actually backing up the promissory note. So we'll think of that as like it could be title for a vehicle. It's typically going to be a property in some form, but we've seen many things over the years. So basically, if the individual defaults on that loan, then you have something to go back on if it's a collateralized loan. If it's not collateralized, that's going to be what we call an unsecured loan. So that's where you'd want to be a little bit more careful about who you're lending that money to, because unfortunately, if the person collateral there, the unsecured note, you would really want to trust that person, know that person, because they could technically run off with the money. Obviously, you could pursue further charges against that individual, but again, that's just the differentiation between collateralized and uncollateralized in this world for promissory notes. So just going back to it here, this was a collateralized transaction. So basically the total loan amount was $200,000. The term was going to be 12 months and the interest rate being paid was 12% annually. So this is between Sarah and Michael. So the total amount was $200,000, but they both had $100,000 available in their IRA. So they thought might as well just, link the accounts together. It's going to be on the same promissory note. It's just going to list 2 self-directed IRAs together on the same note. And they were able to make that happen. The attorney that drafted this documentation had no issue with it. So listed off both the IRAs on the transactions. So basically this came down to interest only payments with the balloon payment at maturity. And both IRAs held 50% proportional ownership in the note. So everything was properly documented and executed. So basically after the 12 months of this loan being issued, Sarah was able to get back $12,000 in profit. And Michael was also able to get $12,000 back in profit. So it's 12% for both of them and coming back into the IRAs, which was a little bit more than what they were previously getting when it was just sitting in, basically mutual funds and other investments that had been sitting in before. So the total, basically the total earnings earned by both of the IRAs here came out to $24,000. So this is extremely common. We see a lot of people that will do private lending, especially to fixer and flippers. That's, I usually use the example of my father. I grew up in Ohio and my father is an avid private lender. So he'll typically lend out, 1 to 2 transactions a year. Generally going to charge, again, it depends on the situation and the length of the loan. It could be a shorter loan. It could be a month, 3 months, 6 months, or it could be longer, call it 12 months, 24 months. Interest rates could be anywhere from 6% to 10% to 12%. It really depends on the individual and the duration of the loan, but he typically will keep that money working for him and he'll continue issuing out loans one after another. As soon as the money comes back in, he'll typically look for another candidate to lend out to, and then he'll re-lend and rinse and repeat that process. But this is basically where the IRA is the bank, so we can lend out to other individuals. The only people that we could not lend to, this is where it gets into the prohibited transactions, which is another thing that we'll cover a little bit on. But prohibited transactions are basically no-nos that you can't do in the IRA. So these are transactions that you'd want to stay away from. So for private lending, I wouldn't be able to lend that money to my mother, my father, or my son, or my daughter. So the up and down the lineal bloodline, so that'd be mom, dad, son, daughter, for example. Now, brother, sister's totally okay. I can go horizontally here. That's fine. I just can't go up and down the family tree. So brother, sister, cousin, best friend, distant relative, that's all good. So basically, I wouldn't be able to lend it to direct lineal bloodline. So that'd be considered a prohibited transaction. So we're talking about the self-directed IRAs here. We're talking about the different accounts. So basically, what does all of this cost? Set up a self-directed IRA. Where would I land? So, that's a great question. Basically on the screen here, these are the rates that we charge for the self-directed IRAs. It's very simple and straightforward. So basically, if you own a tangible property in the IRA, like let's say I go and I buy a $300,000 rental property, that would be $345 a year all in to hold that in my portfolio with Advanta in my self-directed IRA. And then basically anything that's not a tangible property would be considered a private investment. So that'd be private lending. Maybe I invest into a startup company, private equity, private loan, promissory note. That would be $295 annually to hold that private note in the self-directed IRA. So there's a one-time purchase fee of $95 to enter these transactions. So I'm going to enter into a real estate investment, or I'm going to enter into a private investment. There's that purchase fee to get involved. So that's on the left-hand side. On the right, you'll see metals IRA. We'll include this as well. This would be only for precious metals IRAs. So you can hold an unlimited amount of metals in the IRA, and you'll pay $250 annually for Advanta to basically administer that. Now, as far as the fees are concerned, again, we were talking about the Checkbook LLC as well. So the Checkbook LLC, the main point just to make here, if you do go that direction, is considered as one investment in the account. So if I had one Checkbook LLC, it wouldn't just be the $295 annually moving forward every year. But within that Checkbook LLC, I can hold an unlimited number of properties and other investments. It's just all going to be tucked away into that LLC entity. So that's what we commonly see people will do. If we're looking to buy a number of properties, looking to get involved with a number of transactions, then typically speaking, the LLC entity route is typically the best route to go down. And then this is the annual fee account option as well. So just quickly touch on this. So if you don't do the Checkbook LLC route and you want to have a variety of investments with Advanta in the account directly held under the IRA, these would be the rates that you would look at paying based on each applicable tier or tax bracket. So if you have any further questions on that, obviously feel free to reach out to us. We're happy to help. And then on this slide here, you'll see the different QR codes for the different guides. So these are our three main guides that we usually give out. So we have the main self-directed IRA investor guide on the front. And then second is the real estate investor guide. And then third is the ultimate solo 401k guide for small business owners. So, we'll distribute this deck as well for the participants, or it will be available for you. So if you want to download any of these, you can simply just whip out your phone, go to camera, and then open up the camera, and you can scan any of these, and you can automatically go ahead and download those as well. If you have any questions on that, feel free to reach out to us. And then just to reiterate, so we were talking about a lot of investments. We were talking about a lot of other things previously, but on the actual account application itself and the setup, this is pretty straightforward and easy. So basically, you're able to go to our website online and you would basically just hit open an account. It takes about 15 minutes. It's going to ask you some pretty basic information. So it's going to be like first name, last name, address, date of birth. So you fill that in. When you get to section 2, that's where we're going to choose whether it's a transfer or a rollover. So either or. So we enter in that information and basically hit submit. And then within 24 hours or so, we'll have the account up and running. Your account manager reaches out to you to introduce themselves, and we're able to complete funding and then move on to the investment after the account is funded. So simple 3-step process. Again, you can ultimately go to our website online. If you have any questions on that, feel free to reach out to us. And then lastly, worth mentioning, so we are doing a switcher promotion right now. So these are some common other self-directed IRA companies that are out there. Again, the main differentiator with us is that every client gets a dedicated account manager. So these are just some examples of other providers, but If you do switch from an existing self-directed IRA from a different provider, we will pay $150 to you. Basically, that's to cover the termination fees associated with these other companies as well. So if you already are using a self-directed IRA and you're looking for more of a personal experience, or you kind of like what you heard about us at Advanta, feel free to get in contact. But we are ultimately covering those switching charges as well. And went pretty quick. We had a lot of material to cover, but we can open it up for any Q&A there.
Yeah.
That's
Great job, man. Great content. A lot of great gems and nuggets there. And I was jotting down notes as you were speaking because, it's oftentimes you learn more. And one of the things I learned as you were talking about this that I hadn't heard about was the ESA Coverdell account and that transfer. That was something that was interesting and new in terms of these different accounts. But one of the things that I wanted to make sure that we could actually talk about that I've heard about IRA accounts, especially for those who are investing in real estate. Of course, there's the UBIT tax. Maybe you can unpack that a little bit for people so that they can have a little bit more understanding about what that is and what to watch out for.
For sure, yeah. So it's called UBIT tax, stands for unrelated business income tax. But once you're educated on it, it's really just what UBIT tax is. If I have a self-directed IRA and then I have money in my self-directed IRA, if I leverage that IRA, like we have certain loans out there, they're called non-recourse loans. We work with different non-recourse lenders that will lend to IRAs, for example. That would ultimately cause my IRA to incur UBIT tax. So it's on the debt leverage side of the deal. So like, let's say it's, I had 20% down and 80% of the purchase was loan, then 80% of that transaction moving forward, 80% of the proceeds would be exposed to UBIT taxes. So basically there are 4 different brackets for UBIT tax. The highest being anything above $12,500 in profit is in the maximum UBIT tax tier, which is 38.5%, which is pretty high. Now, there are various deductions that we take to offset that UBIT tax, such as interest expenses, repairs, maintenance. There's about 7 categories that we can use to take off that UBIT tax, but that ultimately would apply for a self-directed IRA on its face. Now, the main thing that we see people do is the small business income, they'll typically go with a solo 401k plan. So solo 401ks are exempt from paying UBIT taxes. So this is the really big one. So for those people out there that have 1099 income, you qualify for that solo 401k. So that really opens up the door. So you can now leverage with non-recourse loan, other types of loans that are available. You can leverage that retirement account and then you're not paying that UBIT tax. So that's huge. So we see a lot of people that will go with the solo 401k plan just for that very reason. So yeah, we're talking about real estate leverage. That's where UBIT tax usually comes into play. The other category is if I invested into an active business. If my IRA invests into an active business and I'm not getting interest income back, I'm actually getting active business income through that deal, that would also typically be exposed to UBIT taxes as well. So that's when I'm investing into an active trader business. And if you want to see the breakdown, if you wanted to do a private equity investment, invest into a private opportunity, you would want to run that by us because we can analyze it a little bit further and see if it is exposed to UBIT tax or not. Now, companies can structure the payout here and structure the company so they're not going to be exposed to UBIT taxes, which we'll commonly see. So it'll be more along the lines of interest income or dividend income instead of being the active business income that's being paid back. So that's the other major thing. So yeah, in a nutshell, UBIT tax does apply in certain scenarios, but it's not the end of the world. It's just cost of doing business here with a lot of different self-directed retirement accounts. It's one of those things like if you're aware of it, but a lot of people aren't aware that you have a variety of deductions as well. So typically speaking, if we fully utilize those deductions that are available, that will bring the UBIT tax number down to a much smaller amount as well.
Oh, that's great. Thank you for that clarification. I think it's just helpful for people to kind of understand those concepts. Of course, as you mentioned, if people have a question, I want to ask one other question, and that was about, what we learned about how you can leverage HSAs for investing. We learned about promissory notes and, promissory notes specifically, looking at collateralized loans and those types of things versus not in and how, what to look for versus what not to look for in those situations. So super great information. You talked about a great switcher program that you're talking about. One of the questions that I had as I was thinking through this, like if someone is interested, if they are a real estate investor and perhaps they want to leverage their self-directed IRA for maybe a short-term rental opportunity, do you see those types of things happening with people investing with their IRAs?
Yeah. So again, short-term rentals are, very popular here with Advanta IRA. So that'd be like your Airbnbs, your Verbos, right? So we typically see those done in Checkbook LLC IRAs. That's usually the cleanest way to go about doing those. Now that also kind of coincides with that UBIT taxes that we were just talking about as well. If we're offering personal services such as like hotel related services for people that are staying in those Verbo or Airbnb properties, it can trigger UBIT tax. So again, rule of thumb there, if you are looking to do short-term rentals, make sure you talk to us because you have to structure it a certain way. But yeah, you should be in the clear as long as we're aware of some of the rules there and we can structure that with you specifically. But that's also the very common category for, people that, obviously in our area here, we're in Clearwater, Florida, see a ton of people that are out of state buyers of real estate just because it's a beach town for those that aren't familiar with Clearwater. So, there's a lot of people here that stay in the Airbnbs all the time. And we actually see a lot of people that are buying, Airbnbs in the area. So it's a good example. But the idea is that we could achieve a slightly higher return or much higher return in certain cases by doing an Airbnb versus just having it be a long-term rental property. So that's the general idea.
Great tip. Well, thank you for that. Now, just to we're going to bring it home here. What I do with all the guests who join this meetup, we have a handful of questions to ask folks so that people can get to know you a little bit more. And so I'll run down these questions. Would love to have you answer them and let us know a little bit about you. So the first question that we have for you is I'm a big traveler, love to travel, love to get out there and see the world and everything that it has to offer. What is one of the best trips you have taken and why?
Yeah. So I guess like the number one trip is, so I've done it multiple times, but I'm a diver, a certified diver, and I do diving actually with sharks. Specifically, I've gone diving with great white sharks. So the Farallon Islands off the coast of San Francisco. You can also go to like Cape Town, South Africa, other places, right? But that is pretty insane if you decide to do that. So you're actually in the cage with, great white sharks coming up and like hitting the cage. So that's definitely, it comes to mind as like the most like, interesting one I've done.
Wow, that's incredible. I've never met anyone that has done that, and I've seen it on television. I don't know if I have the nerves for that, but shout out to you for doing those things for sure. What are you working on these days? So Advanta, you guys got a lot of great things going on, a big company, lots of great offerings for investors and people looking to diversify. What's one thing that you're working on these days that you're super excited about?
Yeah, I mean, so for on the Advanta side of things, like it's just been great because one of the speakers here. So I do a lot of traveling. So every couple of weeks, I'm basically in a different state. So doing a lot of seminars, live seminars for folks. Like that's really been cutting my teeth, so to speak, on doing that. That's been a lot of fun. And then I'm a private investor, a part owner in a startup company right now as well in the beverage industry. So it's actually an energy drink related company that I'm excited to working with the team on that in the background as well. So when I'm not at Advance, I spend the other half of my time working on that. But yeah, basically it's been pretty packed lately, but it's been good.
Very exciting. So you come across a lot of people who have achieved financial freedom, and financial freedom means different things to different people. But what does financial freedom mean to you?
Just freedom to do whatever I want. And, for the folks that are listening, I think, it's something that a lot of real estate investors tell me. So they get involved with real estate and they get very, very busy because they don't want to work the 9 to 5 for the rest of their lives. They want to have direct control. They want to be able to do what they want to do, go where they want to go. So that's really what this is all about at the end of the day, like getting involved with some of these transactions with your retirement account. I mean, you can see, exponential returns, inside the self-directed IRAs versus just, waiting that, you're at the mercy of the stock market, whatever the stock market is doing. So we often tell people, if you're good with real estate or, you want to just get involved with it, might as well use your IRA to do it as well. It'll just get you to that place, faster. Ultimately, you can include that in your transactions.
Absolutely. And the last question that we have for you is about wealth mindset. And the name of this meetup, I took a lot of time to name it, and coming up with wealth mindset and real estate investing was, it took some time, but wealth mindset really was something that was important to me. It meant different things to me, and everyone I ask, it means something different. And so I want to understand from you, from your perspective, are all the credentials and degrees that you have and all the things that you spoke about, that we talked about in your intro. Of course, having a wealth mindset for you might be something way different than others, but what does having a wealth mindset mean to you?
For me personally, it's just about being open to new opportunities. Like I got exposed to like private equity, investing into private companies, not super long ago, like, 3, 4 years ago. And that really kind of changed my life because it really just opens up this other door to this other realm of investing into private companies, which I thought was, super complex. You wouldn't be able to do it. I don't have millions of dollars, obviously, just laying around. So like, the money that I had available, I wanted to use that to invest into private startups and stuff as well. So it's just about keeping your ears open for new opportunities, willing to learn about something that's new. It's not, like you're just going to just going to do real estate for the rest of my life, right? You got to be open to other opportunities as well. So I would say that's where it comes in. Like with me, I was able to learn and I wanted to learn about new things. So just learning about that new stuff.
Awesome. Owen, thank you so much for taking the time to educate us all on this. You have your contact information on the screen for everybody. Reach out to Owen, scan the QR code, give him a call or shoot him an email, or in fact, you could even book a meeting on his calendar is made available here. Talk to him a little bit more about these offerings and what it might mean to you to make some of your capital, your retirement funds available for you to diversify your portfolio. So take advantage. Owen, thank you again for taking the time out to educate us all, and have a great rest of your night.
Yep. Yeah, no problem. Yeah, appreciate it. Yeah, hope everyone got something out of it. Have a great night too.
Thank you. Good night.